And now, ladies and gentlemen, I'd like to invite Mr. Hector Gomez-Ang, Regional Director, South Asia at IFC. A Mexican national, Hector joined IFC in Mexico City in 2006 as an investment officer, where he led business development in Mexico and Central America. Over the years, he has served as country manager for Angola, Mozambique, Zambia, and Botswana, and has led the establishment of IFC's operations in Angola. He has also been the country manager for Brazil, where he led the repositioning of IFC's operations through a strong investment program and advisory engagements with federal agencies and subnational governments. In his new role in South Asia, he will play a critical role in boosting IFC's investments in the region as it looks to recover from the severe impacts of COVID-19. IFC is a member of World Bank Group and has been funding for micro SMEs as well as promoting green growth through investments in sustainable infrastructures like renewable energy and digital connectivity. IFC also sees a 2.8 trillion investment opportunity in countries like India and Bangladesh in rebuilding for a green, sustainable future. We will hear more about some of these plans from Hector in a short while. So welcome on board, Hector, and over to you.
Thank you. Thank you very much. Good morning and good afternoon to all of you. It's a pleasure to join today on this event for Impact Capital for early stage climate tech innovations. I want to really thank IIC. I want to thank Climate Investment Conclave and the Climate Collective for really hosting this very important discussion. Okay. We are here today to essentially explore how impact capital can be deployed for climate smart solution. And I think it's not only timely, but it's a really, when you look at the overlap of impact, climate, India, it's a very, very appealing proposition. Right? Let me just frame maybe some of the discussion by putting some numbers and some perspective on how we see it as a development bank. First of all, I think the multiplier effects of climate change are significant. Right? I don't think I need to preach to the choir here, but climate change could have, among many other impacts, could essentially push a lot of people back into poverty and could really erode a lot of very hard-won development gains that South Asia has had over the past decades and the globe and the world as a whole. Right? So that's all the context that is relevant for us. However, the other side of the coin, the flip side of the coin, is that based on some of the analysis on 21 of the largest emerging markets, dealing with this and addressing climate change through climate tech, through climate investments, it's something that could generate around 10 trillion in investment opportunities in the next decade. We estimate around 215 million jobs that could be created net, and not to mention the billions of tons, around 4 billion of tons of CO2 equivalent reduction. Right, so it's jobs, it's a lot of sort of injection into the GDP, and it's also the environmental aspect. And the other piece is that I think we need to put this in context. This happens in the short and in the long term. So in the short term, we will get the jobs. In the short term, we will get the economic growth. But there are the long-term gains, which is the carbonizing of our economy, making the world more resilient. About intergenerational equity. So it's I think by far the benefits are above the challenges and the costs, and this is what brings us here together. I think we are, maybe if I could put it in different words, we're living a very exciting moment for climate tech, but in a very cloudy sky, right? So it's cloudy. We're operating and we have our umbrellas out, but it's a cloudy, stormy sky. And maybe say a little bit as to why do we think it's an exciting moment, okay? Because I'm sure some people will disagree with me, but let me just tell you where we're coming from. I think, on one hand, according to the International Energy Agency, today more climate tech related patents are being granted than any other types of technologies. Right? So we are living in a moment where there is a buzz, there is sort of a lot of steam coming from climate tech. If you look in terms of money flowing into the sector, in 2020, around $500 billion were invested in energy transition across the globe, right? More than double than a decade ago. Okay? If you look on climate tech on its own, climate tech has been growing since 2013, according to PwC, at around 5 times sort of faster pace than the general funding of startups. Right? Of course, it comes from a smaller base, but it is coming out. It is growing out very, very strongly. And I think probably in addition to this, because I think I could be here talk about with a lot of data points that illustrate, the story. I think one area that for us is very relevant is that the ecosystem appears to be the evolving ecosystem or the nascent ecosystem appears to be much more robust than ever. Okay, and I think this is very relevant because it's no longer VC. It's no longer only VC investors. It's really it's a complex and it's a robust ecosystem that is the governments, the philanthropists and donors, the banks, capital markets, it's private equity, it's the big traditional companies, if you wanna call it, that are coming in. So I think this is from our perspective, and from previous fates and fashions and stuff, it looks very robust. Okay? And I think we are onto something very good. So I think we're only getting started in this. And I think the idea or the concept of harnessing impact investment to accelerate climate tech, it's something that makes all the sense. And maybe give a little bit more perspective on impact investment. I think just like climate tech, impact investment is something that has emerged over the past years as a very promising investment strategy that we can not only achieve commercial returns, but we can get social, economic, environmental, all other types of returns, right, in a measurable way. A new report coming from IFC that just recently published, we estimate that in spite of the turbulence caused by COVID-19, there are around $2.3 trillion invested in impact, and around 620 billion are clearly identifiable as having been invested in climate related. Okay? And this is a big number, but the truth is that it's only a very small percentage of the global assets under management. Right? So we think there is a lot of room to grow there. Our assessment belief is that the total funds available for impact could reach around $26 trillion, over time. And there would be around 10% of global capital markets. That's sort of, an aspirational number. And the caveat here is that the right opportunities need to be available. So I think this is a purpose-minded capital that is seeking for good projects to support, good companies to support. So I think impact investment, the way we see it, impact investment needs to scale up, and it's looking for sectors that have the opportunity or the ability to be scaled. And I think climate tech is one, and in particular, climate tech in India is one where you can really achieve scale of impact and of investment. We, as IFC, as International Finance Corporation, we see ourselves as one of the original impact investors, right? So we were founded 60 years ago, and I think we have built a case that impact investment can meet both impact and commercial targets. We were founded with a mandate to invest for impact in emerging markets. That's our mandate, and we do all sorts of products: equity, debt, advisory. We do research. We are also sort of a role of advocacy in pushing certain agendas that we believe are relevant for the private sector. And today we are the world's largest global development institution that work with the private sector. Right? And in the context of the mission of the World Bank Group that we are part of, which is eradicate extreme poverty and boost shared prosperity. And climate is something that cuts across those. But the truth of the matter is that we have this very important mandate and very important mission, but our mission is really accomplished by the actions and by what our investee companies, our clients, and our partners do with our money. Right? And I think this is something that is very relevant. It's not because we disperse a loan or we make an equity investment. It's really what the entrepreneur does with that money, what our partner company does with that money, that is really going to have the impact. And this is sort of something that is very relevant to our activity. So since 1956, we've been investing, and maybe one way to share with you why do we believe this promise of impact investment is we've been able to develop a very robust, we believe, proof of concept that you can actually achieve impact or profitability, right? So maybe I would let me share with you some of. We recently looked at our portfolio of investments, and this is what we found. Right? So we compared our investments. Maybe the starting point is we as IFC, we are an impact investor. Every investment that we do, we need to achieve, yes, commercial returns, but also we have a high bar for what's the social, economic, and environmental impact of it, right? So we've been doing impact investment for a long time, and we measure it. So we look at our investments since 1961 to compare it with the Standard & Poor's 500, with the S&P 500 index, right? So it's an index. What would have happened, right? And we compare with that, and we compare around, I think it's more than 2,000 transactions that we looked into it. Our track record, it's our returns, let's say, it's 1.15 times that of the S&P, right? So we beat that index in that very long period of time and with a very relevant sample of transactions. When we compare ourselves with the MSCI World, so a broader index that looks at the whole world, since 1970, then we actually beat it by 1.23. So it's 1.23 times we beat this index over that period. And when we compared our investments with probably what is the most relevant index in that case, given our activity, it's the MSCI Emerging Markets Index, right? There would be a 1.30 times that we are actually beating it. So I think that what you can see here is as we compare with the most relevant index, which would be the MSCI, 100% impact portfolio, we actually got better returns than the market, right? I think so. This is why we are big advocates that impact investment is here, and impact investment it can achieve both, right? It's not there are no trade-off. It's not easy, but there are no trade-offs in between impact and commercial returns. So with that in mind, we, as the impact investment movement started taking hold, we partnered with a core group of asset managers, of asset owners, and other development finance institutions to develop the operating principles for impact management. So it's a set of principles that help us define so that we feel comfortable calling impact. Right? So what is impact? And let's make sure that we all mean the same when we talk about impact investment. At this point, we have around 135 signatories of the operating principles that were launched, I think, 2 or 3 years ago, and these signatories represent around $500 billion in assets under management. So I think we're getting there. The idea is to bring more transparency. We need transparency. We need accountability, so we can investors and every participant in the market can feel comfortable that we are all calling impact what should be called impact. Which brings us to the point of the overlapping opportunity of climate, of impact investment and India. And maybe just a little bit of context of how we see this is the Paris Agreement. If we take it as a starting point, in our view, or in our estimates and other estimates, has opened around $23 trillion, right, in opportunities for climate smart investments in emerging markets. India is one of the countries that is on track to meet its targets, right? This is relevant. I mean, it's a mixed bag, and then there are many reasons for it. But India is one of the countries that is on track to meet its targets. So we think that as a big country that is on track to meet its targets, and based on our estimates, India offers around trillion of investment opportunities in renewables, in transport, in green buildings, in waste, in water, in agriculture, right? I think so this is the context. 3 trillion, you start having big numbers. This is I don't want to. At the end of the day, what matters is the smaller numbers that we can actually action. But this is just a context. Right? I think our portfolio in India it's aiming. Climate is our number 1 priority together with gender in India, and our portfolio it's aiming to reflect this this ambition, right? So just as an example, we made an investment a few years ago in we made a $15 million equity investment in CleanMax. It was our first ever investment in a distributed generation connected to the grid. Today is the largest provider of renewable power to commercial and industrial customers. So renewable, yes, it's obviously probably the most noticeable area where there has been clean tech investment in India, but in our view, there are opportunities in other sectors, transport, logistics, for instance. And the needs are all across, in our view, on the services side and also on the product side. So it's it's not only a services or product, but it's on the two sides that, in our view, there are opportunities. For instance, we are based on the same research. We estimate there's the opportunity with electric vehicles is around $600 billion, right, in India, 600 billion. And the innovation that is happening, that we are witnessing in India, it shows that probably we are lowballing this opportunity, right? Probably we are, we were at the low end, because I think there's a positive confluence of market policies and demand in this particular area. But for instance, when we talk about services, we made an investment in a company called Blackbox, right, which is essentially a tech platform to maximize efficiency of trucks, which has a direct impact on helping decarbonize the transport sector. So this is a sort of our approach. Our approach is not a narrow one that looks only at sort of a replacement of fleet. We're talking about transport or so, but there is a service side approach and there is a manufacturing or an equipment side approach. I think overall, and this is what is reflected in our strategy in the country, we believe that the demographics of the country, the scale that you can achieve, the degree of industrialization, and the policy commitments that are in place, and that I think we all expect to continue to be in place and to increase, provide an extremely fertile ground to have this confluence that we're seeking, which is the scale of clean tech, the scale of impact, and the ability to marry those that impact and financial returns. Right? Now, I've been talking about this as if it was easy to do, right? And I think we need to recognize. I think building climate tech solutions at scale is not easy, as most of the entrepreneurs that are attending here or the investors that are participating here are very much aware. But however, we believe that we are at a tipping point. Right? We are at a moment with the recent technology, with the regulatory changes, and with the investor interest that we're witnessing, there's a tipping point. And I think this brings a massive opportunity, but it also brings a very large, how can I say, responsibility for us as industry. Right? I think we, as industry, I mean the ecosystem that I think we are here represented and we are here participating, we will need to co-create this industry. We will need to co-create and collaborate to take it to scale. And this is sort of what we believe. This is a very complex sector, and no single institution has the solution to all the problems, so we need to collaborate. I think some of the challenges that for us are very obvious and that we see, and that we will work together. And so I want to be very clear with that. I don't want to come here to just say, these are the problems, someone solve them. I think we need to work together in solving them. One is climate startups have a longer sort of gestation period, a longer incubation period than just a consumer startup, for instance, in general, right? I'm generalizing, but this is it. So we need to have the patient capital and the right capital at every stage, because in climate tech, you will have some R&D specific risk. And so we need to have the full array again, the government funding, the donor funding, the early VC funding, the late VC funding, the corporate, the development banks, the commercial investors, right? So this is why we believe that impact capital is uniquely positioned to support this. The other thing is that, I think it's a challenge for entrepreneurs, and I'm stating the obvious here, is the climate tech startups will need to develop products that have a smooth fit with the existing infrastructure. Right? This is sort of like, if we look at the success stories, this is really what's been driving one of the key drivers of success. And I think, again, we come back to the co-creation and the collaboration to coexist and to have a smooth fit with existing infrastructure. This will most likely only happen if there is real collaboration between the traditional and the emerging businesses. Right? If we all live within our silos, then this will not happen or will not be scaled up as much as we want. And I think I'm very sure that India's innovators and entrepreneurs will rise up to the challenge. But I think we, as the members of this ecosystem and the industry, we will be here to support them. So I think some of us here, we have the convening power and hopefully the honest broker role to actually help some of these connections happen so that development is accelerated. I think that the other one that is clearly one is continued regulation support is critical. So it's I think, for instance, the electric vehicle market is one example of this perfect alignment of policies, investor interest, technology, and so on. But I think we need to make sure and work as industry with the government, with everyone together, so that we can develop that for others. Right? So it's again, we go back to the concept that we strongly believe of co-create, collaborate to really take this off. We will need in other sectors, whether it's waste, whether it's water, whether it's any other sector where we believe it can be scaled up. We will. So to finalize, I think we have as industry, we have as investment industry, as entrepreneurs, as development banks, we have a great opportunity in front of us, and we have a great opportunity to make it happen with this overlapping of impact of climate and India, right? But I think with that opportunity comes a very big responsibility for us to work as an industry to really develop and not miss this opportunity, right? Because I think there's a big expectation and we can have a massive impact globally with this. So the opportunity is here. The time is now, and I think we as IFC, but I guess all of us that are around the table here, are committed to contribute to the development of this exciting but overall much needed sector. So with that, I only want to reiterate our commitment from IFC and to thank again to the hosts for putting together this conversation. And I look forward to this conversation and to see which ways and how can we mobilize impact capital to accelerate the growth of climate tech in India. Thank you very much.
Thanks, Hector. This is truly very inspiring and very heartening to hear. IFC's work as investors across core social and environmental sectors. As you rightly pointed out, we are indeed in a very interesting moment in climate tech, and the onus of climate tech is no longer limited to VCs, but to the entire ecosystem. And hopefully, I think over the next 2 days, we are also trying to find solutions to some of these challenges you pointed out over the capital across different stages and bringing all other stakeholders together. So on behalf of IFC and Climate Collective, I'd like to thank you once again and for being here today. I'm sure we'll be circling back on some of these issues with IFC, over in the future, and look forward for a deeper engagement in future. So thanks a lot. Thanks a lot once again.